welcome to this edition of Closing Bell. I'm Nandita Khemka.
And I'm Santosh Nair.
Well, today, Santo, it was a pretty range-bound session as it has been the rest of the week, given the fact that we are awaiting the Karnataka poll results tomorrow. That probably could chart out the direction for the market. But if you look at the Nifty, it managed to recoup most of the losses that it made during the day. So ended higher by about 17-18 odd points above that 18,300 mark. Even the Sensex managed to clock in a 100-point up move. Broader end of the markets were underperforming, mid-cap index down by about 0.5% or thereabouts. And when you look at the sectoral movers, you had autos and financials that were shining by the end of trade, but media and metals pack. Those two indices saw a bit of, in fact, they were among the top laggards. When you talk about earnings, Tata Motors is slated to report its fourth quarter numbers today, and a strong set of numbers expected, with profit expected to grow somewhere around 5 to 7 times compared to last year. And Cipla is one pharma company that reported earnings 15 or 10 minutes ago, and it was due to one-off and higher tax expenses that profits have come in below estimates. But numbers weren't all that great when it comes to Cipla. The stock ended in the red. Aside of that, if you look at the Nifty gainers, you had Eicher Motors. That stock was up 7% on the back of good numbers. You had M&M. IndusInd Bank has been gaining for the most part of the week, and even today it was among the top Nifty gainers. Axis Bank and HUL were some of the other movers. And among losers, you had the likes of Hindalco, BPCL, NTPC, Tata Steel. So metals, as I said, not doing all that well. Among the mid-cap movers, likes of Intellect Design reacting to earnings, of course, Zensar Tech and Lal PathLabs. Numbers weren't good, but the stock did manage to, stage quite a good rally and, ended with gains to the tune of 7% or thereabouts. So that was about the market action. But since I'm talking about Lal PathLabs, do you want to talk about how the stock has staged a turnaround, given the fact that in the morning it wasn't doing all that well when trade opened?
Well, I think Nandita, probably there's been extreme pessimism built into all diagnostic company stocks. If you see this year alone, most of them have fallen anywhere between 30 to almost 50%, be it Lal PathLab, Metropolis Healthcare,
Right.
Thyrocare, or
the COVID, silver lining seems to have faded, given the fact that, right now we did see a resurgence in cases, but once again they have dipped to 3,000 to 4,000 cases a day.
But even otherwise, COVID was never, going to be a major source of revenue in this year. But what is also happening at this point in time is that these labs are also investing, probably because of the competitive pressures. They also need to strengthen their own network. So that is also something that's playing out. Plus, the kind of juicy margins that you had seen till about a couple of years back, 31 odd percent. Now you're not going to see that again. It's normalized somewhere to around 24%. But to Dr. Lal PathLabs credit, it's managed to maintain its margin in that particular range. Now the up move is very surprising. Nothing in the numbers suggests anything that should have triggered this kind of rally in the stock. But most probably, I think, Nandita, it could have to do with the fact that there may have been a lot of traders short on the stock, and now that the bad news is out there in the open, probably there could have been some covering up of positions, which then could have triggered this kind of a move. But again, most brokerages don't seem to be very upbeat. UBS, yes, it's maintained its buy rating on the stock, target price 2,500, but it has also trimmed its earnings estimate for Lal PathLab by
5 to 7%.
this year and the next by about 5 to 6%. So which means that UBS probably is betting on the market giving a higher multiple to the stock if it has still managed to, if it's still holding on to its price target. Goldman Sachs, though, is neutral on the stock.
All right.
Yeah.
All right, so let's talk about some of the stocks on my radar this afternoon. The first one, of course, it's a sitting duck, Eicher Motors. That stock was up 7% after a great set of numbers in the fourth quarter. The volumes, I think, deserve mention. Even both the volumes and revenues were at a record when it comes to Eicher Motors, and it has actually outpaced all its peers. If you look at the volume growth of the other companies, Eicher Motors was 18% plus, but if you talk about TVS Motors, that was just about 1.5% on a YY basis. Bajaj Auto, in fact, saw a deceleration of 13%. So, Eicher Motors stood out in terms of valuations, in fact, revenues as well as volumes. And if you look at the domestic business, that is doing pretty well, even though exports are a pain point for most of these two-wheeler makers, but a lot of it is being offset by the superior products or product mix that it has. Given the fact that it has its variant Super Meteor is doing pretty well and it's gaining traction even in international markets now. And it has also announced a capex of 1,000 crore rupees towards EV products and EV manufacturing. And that is something that the street is actually waiting for, because EV shift is the next big theme, right? So the street is pretty bullish on that. If you look at some of the brokerage views coming in, Jefferies has a buy rating with a target price of 4,000 rupees. It expects the tailwinds of two-wheeler demand recovery to play out for this company. But JP Morgan, on the other hand, feels that even though Enfield has done extremely well for Eicher this time around, it may struggle to outperform a two-wheeler market growth going forward in the current fiscal, even though last fiscal was pretty good for Enfield. Aside of that, valuation-wise, it's trading at 23x forward earnings, which is versus its historical average of 27x. So there is room for headroom for valuation that exists for this stock. So this stock, I think, even though there are concerns about exports, but I think its EV bet and the kind of demand it's seeing for some of its products is something that it could that could help the automaker rake in gains in future.
Well, Nandita, with Eicher Motors, one of the worry that the market seemed to have on this stock was that there was a risk that Eicher was probably trying to pricing itself out of the market, but now they somehow seem to have addressed that part, and that is what the market appears to be drawing comfort from. And as you pointed out, the domestic sales numbers have been quite good, and the rules of the general two-wheeler sector doesn't seem to really apply to Eicher, considering that it's a slightly premium bike compared to the other normal regular two-wheelers that we're talking about. So Eicher is in a different category altogether, and yes, the fact that it has managed to maintain its volumes and even get a fair bit of success with some of its new launches, that is clearly what seems to be having the market excited. And as for the valuation gap, well, at this point in time, clearly it does look like the company is on a very firm wicket, but given that the overall outlook on the auto sector at this point is a little I would say a little cautious at this point, we'll have to wait and watch how this valuation sustain.
Right, the caution is the word when it comes to automakers, but caution is also the word when it comes to paint makers, right? Asian Paints has reported a very steady set of numbers, double-digit volume growth, everything going good, but of course we know that there is the overhang of Grasim making an entry into the paint segment, and that will happen somewhere in 2024. The company is gearing up for meeting that fighting that competition rather, and which is what Jefferies has pointed out, that competition worries could play spoil sport when it comes to Asian Paints, even though certain brokerages are bullish on the counter. But I want to also point out that the management has given a guidance of 18 to 20% EBITDA margin in FY24. So that's something that the street has taken heart from. But Grasim, I beg your pardon, Asian Paints has announced an 8,000 crore rupee capex to meet or to fight this competition arising out of Grasim's entry, right? So that is something that it would use for capex, for smaller acquisitions and the likes. But that would impact its free cash flow. And Asian Paints is known to generate good to have good free cash flows, right? So that is something that could be a dampener for the stock going forward. Aside of that, even though the management sounds very confident that even if Grasim or new players enter, it will just take about 3 to 4% of market share. But even then, I mean, even though the company is confident, but you can't ignore the fact that Grasim is an Aditya Birla owned company, and it will create sort of a very stiff competitive environment in the market. Besides the fact that Pidilite has also entered the paints market from waterproofing, so competition is increasing, and that is something that could hurt Asian Paints prospects going forward, unless it looks at a different kind of launch or something like that to really fight that competition. So cautious is the word when it comes to paint makers. Santo, what are your thoughts?
Well, a couple of things that would have me a little cautious again on Asian Paints is that the valuations are pretty stiff at current levels. So, huge upsides, I am not sure how much possible they are. Secondly, it is hard to say how this new competition in the field will play out over the longer term. At least sure enough, in the short term there are concerns, given that Grasim itself has deep pockets. It would really try to play hard. So, there could be some kind of margin pressures, at least in the short term, although it is very much possible that the impact on existing players may not be as much as what the market has feared, but that we will get to know only over the long term. So, in the short term, one can kind of expect a fair bit of price wars, and given that Asian Paints is not exactly a cheap stock at this point in time, clearly probably there could be some room for valuation compression.
Right. So, caution is the word on paint makers, and those were actually the stocks that were on my radar this afternoon. I think with that we have come to the end of this edition of Closing Bell. So, thanks a lot for tuning in. Wish you all a very happy weekend. But don't forget that we will be getting you live coverage of the Karnataka election results that will be coming out tomorrow. So, that would of course be crucial and may provide some direction to where the markets will be headed in the coming weeks. So, tune in for that on Moneycontrol over the weekend. But for now, it's a goodbye from me and Santo. Thanks a lot for watching. For more news and updates, stay tuned to Moneycontrol. Was it okay?
Yeah, yeah.